It happens when you least expect it. You didn't even see it coming. There will be no warning signs. There will be no savior. You could lose everything and it will happen in an instant. Lights out. You came here for the truth, so let me unveil that for you. Today, I'm going to get into the fragility of the market. I will continuously be referencing what you need to know. And quite frankly, what we can see here is that the market, despite all of the certainty that we've been seeing from the analysts, from the mainstream media, from the government, from the investors, the market is worried. And just a little hint of fear caused a massive drop in such a short period of time, considering what happened. And that was essentially nothing. So imagine for a second if one of the real underlying risks presented itself. Well, then we'd be really, really in trouble. Looking at the VIX, volatility of volatility, and while the VIX didn't hit necessarily a record high, it was at 8 not that long ago, and then it spiked to such a high level in such a short period of time. Think about that. None of the underlying risks were present, just that thought that maybe interest rates could rise too fast, too much, and that would cause a problem. So the thought of that made this all possible. That's very worrisome. And then you look at this. Fidelity's website was down. People wanted to log in to see their accounts. People wanted to sell. They wanted to get out of the market. Guess what? They couldn't. It couldn't handle the traffic. This is what is very concerning. People believe that they will be able to sell when they need to. But guess what? They're not prepared because they're saying, look, the market's been going up and up and up. So why would I need to sell? Why do I need to have a stop loss? Why do I need to be able to prepare in advance? I'll worry about it when the market starts to go south. That's the majority of people. Even if you have a stop loss that may not protect you. Horizons ETFs announces trading halt for Beta Pro S&P 500 VIX short-term futures daily inverse ETF. Now, this is one example. Because, of course, the VIX was a big issue that occurred. But think about this as just a small piece of the puzzle. That's what I'm continuously trying to reference here. This is just a small piece of the puzzle. What if it's, who knows, mortgage-backed securities, derivatives products, maybe it's the bond market, who knows? I don't know what it's going to be. But then we start to tumble. You get that snowball effect. You get the domino effect occurring. One thing after another, trading halt here, trading halt there. You have the closures that exist. You have websites that are down. People can't get in. People can't log in. But the market was up. Maybe 20 trading sessions in a row. There was low volatility. Everything was calm. And all of a sudden today, something happened and you can't get your money out. That's what's going to happen. This was just a taste of what you will experience in the near future. Horizons Inverse VIX ETF. Look at that. Look at that dropping off a cliff. A lot of these people in this range here, nothing's happening. Nothing's happening. The VIX is calm, totally chill, relaxed. And then that all changed in an instant. It's how it always happens. Liquidity has flatlined. Just incredible. And we're looking at S&P 500 futures. Think about that. People's ability to buy and sell we're looking at liquidity, where the market needs a buyer and a seller. In Japan, you don't need real buyers. Okay, you only have central banks. And they do so publicly to try to strengthen their image somehow. I'm not sure how that works. But essentially, liquidity has become a big problem. It's made itself known. This here, just another example. Now, switching gears a little bit, the US trade balance deficit, we're looking at this going back, guess what? Financial crisis time frame. So that's what's ultimately occurring with this as well. US annual trade deficit, you could see that it's headed downwards. It might be a little difficult to see here, but we're going back again. Financial crisis timeframes. Here, US trade deficit excluding petroleum, and I believe I read the statistic saying this is the lowest ever. Now, what I would say about the trade deficit is that over the long term, this can only get worse. When we see what will happen with the situation, whatever it is, with importing and exporting and everything else, you'll notice that oftentimes most countries owe other countries. All governments are in debt to one another. The deficit becomes a worse and worse scenario as time goes on. I hope I made myself clear with that, if that was confusing, if my language was backwards. But essentially, the deficit continues to get worse. That's all. Banks have blamed placid markets for lackluster returns in their big trading operations this week. They're cheering the big market swing, seeing hope for a boost in fees that dropped off a cliff last year. Anything that brings back volatility would be good. All right, now, think about that for a second. The banks love volatility. The banks love it when there's turmoil. Yes, they want the Federal Reserve to be there to backstop any problems, of course. But they love to see intraday volatility. That's how they make their money. They've got their computer algorithms trading every second to make things happen. They push the market up, they push it down. But if volatility is going to be down at 8, they're not going to be able to make those big profits. They want to see jumps, they want to see falls, they want to see this happen intraday, but ultimately they want to see everything moving up. And that's the way this works. Big failures are ultimately a good thing as long as the Federal Reserve is there to catch them when they fall. And this year, I just wanted to throw it in at the end. Looking at the rents, I believe this is the top 10 rents in the US. This is from rentcafe.com. Look how expensive rents are. Now, Manhattan declining year over year by 1%, but it doesn't even matter. $4,000 US to rent the average place in New York. It's incredible. Looking at San Francisco, $3,400, Boston, $3,200, and so on. None of these are affordable. None of them. That's why people live in crawl spaces, people live in their vehicles, there's tent cities everywhere, because people can't even rent. Sure, you don't have to live in one of these cities, that's a fact. There are a lot of cities. But this is the situation that many people find themselves in. I'm not telling anybody where to go or how to live. I'm just pointing to the fact that if this is the average rent for a lot of the major cities, that's where a lot of the population is. That's how you have to remember it. When you see, let's take Canada for example, you have a fairly large percentage of the population located, first of all, near the border of the US, as well as the fact that they're in only a handful of the cities. So you can say, well, sure, Toronto and Vancouver are very expensive, but look at it nationally. Okay, but if I think about it on a national basis, I got to think about where all the people are. Okay, well, a large percentage of them are in Toronto and Vancouver. So therefore, looking at those statistically, I can make good generalizations because that's where a lot of the people are living. It's the same thing here on this list. You look at places like Manhattan, San Francisco, these places are heavily populated. So surely I can point to them and suggest a lot of the people pay this in their rent and they're, guess what, not living well. There are a small percentage of people at 1% and higher that are doing well. Maybe the top 10 or 20% can afford this, but surely the average person cannot. That's the issue that's presented itself here today. Ultimately, they're pushed into debt all the way to the edge. And then we have a critical scenario that could occur. And that will, of course, push them right over. That's all for this video. If you found it informative, please give me a thumbs up. Last but not least, if you found the video informative, I know you'll find my books, The Money GPS and my newer release, Global Economic Collapse, even more informative. You can flip through these books at Amazon. There are links in the description below. Take care.